Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update on this fine red morning. So yeah, if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So we did get our expansion of volatility. We did finally, fully and formally break below this support area. That was it was doing its best. It was doing its best to try and hold price action up. But yeah, we failed. We took out these lows. We closed candles below, and then we accelerated pretty much down into not too far away from our next basically next major support level, basically between 42,000. I would guess either we are going to front run this, turn back up above 44,000 and come and back test the underside of the resistance. We're going to do that in pretty short order, or we are going to have to come back down lower and actually properly test out this support level. You wouldn't expect that we are just going to after such a prolonged downward move come straight down and take this level out also straight away. You wouldn't really expect such an aggressive move. If we were to do that, it would have probably happened already, like we did with this move down here. We broke through, we tested it, and then we did bounce back up. But the point being, did come straight down there in one move. But yeah, we haven't done that, so we are probably going to have to if we are going to break lower, grind out this 41 to 42 $1,000 level. That being said, though, ultimately it will likely come down to what happens here. We have the obviously this is what catalyzed this drop in Bitcoin, this big move down based on the Fed's minutes saying that we're gonna probably increase rates in March. And then draw down that balance sheet quicker and sooner. But yeah, you can see the S&P had obviously a bit of a potential swing failure above this upper side, and now it's back below this level. So it needs to either well, it doesn't need to do anything, but it will either basically get back above this this horizontal level area, and then start to make its way basically back up after this little bit of a scare, or it will get pinned under this, at which point it'll probably have to come down and test 46.5, or even down into, just expand this along our $46,000 level. I don't particularly have an opinion on this, other than the fact that a lot of Fed related moves often get retraced. Basically, I mean, you can see a lot of what goes on, and especially if they're a downside move, they often get retraced back to the upside. So I mean, this is an only up market. There will be liquidity coming into the market. We'll have to see if the market has much more of a tantrum, and then the Fed basically has to hold off with what it's doing. It is stuck between a rock and a hard place. It is stuck between the public is acutely aware of the high inflation levels, which is not good for the current administration, re-election wise, and obviously the midterms. And then it is then stuck between that, and then tanking markets will then obviously upset a load of people again also. So yeah, stuck between a rock and a hard place. So ultimately we know they will have to err on the side of inflation, because they have to inflate the debt away. They cannot let this 10-year keep doing what it is doing. This will literally destroy everything. This cost of capital will literally blow up the whole system. Then we'll see a proper crash. The tech bubble crashing like back in the 90s was an 80% correction. I mean, that's a crypto style correction, that is. Not just a Nasdaq, a normal equity indices style correction. But yeah, this is potentially gonna basically take the wheels off, and the Fed is obviously going to have to look at this, and what can they do? Yield curve control. Can they just carry on with the inflation, the balance sheet, and the low rates, and control, basically have price controls of things within the economy? Pricing controls only lead to more shortages, not more shortages. Doesn't necessarily have to be shortages for prices to be up, but will only lead to shortages. and therefore higher prices. So yeah, I mean, things at the moment are not looking great. Things kind of unraveling, but like I said, they will err on the side of inflation. This is just purely political. This is just because people are kicking off about inflation, and the Democrats. I mean, any politician, their first and foremost, their main mission, their main objective, the only thing that is realistically important to them is getting re-elected. And the inflation headlines and just the prices people are paying, that they've become aware of. The frog is aware of that he's getting the temperatures turning up. So yeah, but like I said, if they crash markets, they're gonna have a whole nother level of trouble. And at the end of the day, the people that are invested in markets and these assets are the rich, powerful people, and then obviously a lot of the older people, the boomers that do like to frequent the voting wherever they go and vote. I mean, less younger people actually vote, so a lot of the older people and the older people in power will potentially not really care about the inflation, because that's just inflating their asset prices. They ain't struggling. So yeah, I mean, I would err on the side that this will blow over, and the Fed will, the market will just see through it, like how I envision it, how I kind of see it. But yeah, 10-year obviously looking pretty bad here. Like I said, we've got this line drawn up towards 2%. I think that will be a psychological, I mean, it's just under, but yeah, psychological level of 2%. Once to get above that, I think literally the wheels start to come off. So that cannot be allowed. So yeah, S&P got to get back above here. People just got to digest this Fed stuff. They got to realize that inflation is increasing at a faster rate than what rates can ever increase anyway. Therefore, the real yield will be coming down. The real yields will always still be getting lower and lower. If we look at the DXY, not particularly reacting here. You can see still just sideways consolidation. Does obviously look like a lot like a bull flag in a clear bullish trend, but we have this ascending broadening wedge, of which we are back under now after a foray above. So there is potential for downside here. What I will draw your attention to is the fact oil and other commodities are not really faring that badly, given the circumstance. Yeah, and I will also remind you of the fact that cryptocurrencies are considered commodities. Therefore, if commodities are going to do all right in an inflation environment, which they do, which Bitcoin back tested does also, then yeah, we're not necessarily in for a disaster if it's going to be the environment that we have. Having a quick look at Nascoin, not looking great. The Dow obviously not looking as bad, because like I said, well, not like I said, but the Dow is obviously has a lot more commodity and oil-based companies in it, and then the Russell, obviously the real economy, pretty wrecked there, but still within its sideways range. What else do you want to look at on here? ETH/USD at an important level. Got to hold this level, important level to hold. If not, we have to actually extend across this level, because this will be the next level. But yeah, broken out of the underside of this descending wedge, and hitting to support. So it is do or die here. For ETH, it has to, and this is obviously ETH against USD, so ultimately it's just going to follow the direction of Bitcoin, like realistically. So kind of has to turn up here. Bitcoin, has it potentially got, if we go back to Bitcoin, has it potentially got a front run from this level, and we are then just going to bounce from here, trade sideways, maybe come and test this lower area before making our way up. We shall have to see. But yeah, all to play for. At the moment. I mean, today is going to be a particularly important day to see how this asset reacts. If we can get basically today back above, or I mean, what, Thursday today, yeah, or into Friday, and at least close the week above this horizontal area. I mean, to be on the safe side, let's call it, yeah, above here, so basically let's call it 4740. If the S&P can close above 4740 this Friday, then I think people will look at it over the weekend and not see it as so bad. If we close under, basically, well, we just call it 4,700, trouble. There will be trouble. People will look at that over the weekend and realistically just target either 46 or 45, and just continue with the selling when we open on Monday. So yes, we obviously have the flow of funds that will come back into the market, so we have that potential at least buying pressure. It may not be enough buying pressure relative to the selling pressure, but I mean, the big thing to look at, and also the thing that was kind of telegraphing this all along, this was making moves before the thingy collapsed, before the, it's not a collapse, before we had this pullback, this decline. The 10-year was rising, did have some big moves up. We did speak about what it was doing. It was kind of looking like we were entertaining risk on, but it turns out we were actually moving off, basically, some people kind of knowing what the Fed was talking about, probably Nancy Pelosi and all those insider traders, but yeah, well, what the say is, when we did talk about this, I said there's lots of different reasons why this could move. It was looking like it was moving on risk appetite, but actually it was moving on basically a more hawkish Fed, but well, hawkish is the wrong word because it's not hawkish, but a less dovish Fed. So yeah, there we go. Interesting times. Let's see how it goes. I mean, we never really get V-shaped corrections. It's not really how this market rolls. We may get a nice halfway bounce that could take us above 44. We could even come all the way up back to this, but I would suspect we will trade within this range for a little bit. Even like best case scenario for a little bit, we could lose this. We could lose the $40,000 level. And then things would look particularly bad. But yeah, we'll have to see how it plays out. Like I said, things that the Fed says and does to rock the market. In the past, do just get reversed pretty aggressively, but we shall have to see. We'll have to see what happens. So yeah, there we go, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.